Let that intro plays completely. Let that intro plays completely.
Either so. Complete.
Sir, I will click on. Can you please ask everyone like whether they have taken attendance?
Did you all mark the attendance? Good morning, everyone. The people have joined through online. Have you all marked your attendance? Like a food.
I thought document I have given.
No. Then we can complete.
No, sir. So this is just a screenshot.
Okay.
They all marked now, sir.
Yeah. Good morning, everyone. Thank you. Life cycle costing. Until others join, do you all have any doubts what we all discussed yesterday's class, which is what target costing? You remember first day itself we started with what basic part of what accounting, the differences between financial accounting, management accounting, and we talked about the cost classifications. Am I correct? Nature, function, and behavior. Then we talked about what Philo method. Then we did one questions. How are we going to find out the what variable and fixed cost from a particular total cost? If there is a what step fixed cost. If there is a what step fixed cost. If that is the case, you can't use the Philo method. You'll have to develop two simultaneous equations. Through the equations, you would be able to get what answer. Make sure variable overhead is one of the variable cost. One of the variable cost. It's not a overhead. It's not a what? Overhead. Then we talked about, you remember, we went on OAR, overhead, overhead absorption rate. So I have clearly explained to you all, you remember, the purpose of calculating OAR. How do we calculate OAR? What are the consequences that are we going to face if we do not what? Calculate the OAR? We can decide the selling price of a product. We can value the stocks. If there is no OAR, then it will be a problem for us to what? Do a business. Right? How to calculate OAR? OAR equal budgeted overhead divided by budgeted activity level. Activity level can be either what output or hours. Hours, there are two segments. One is a machine hours, another one is what? Labor hours. Based on the overheads type, whether the overhead is machine intensive or labor intensive, we try to come up with what? Machine hours or what? Labor hours. most of the question itself will clearly indicate you with regard to the way of calculating what OAR. Then we talked about what absorption overhead. Then we talked about what under or over absorption. Under or over absorption. How to calculate under or over absorption? Actual overhead minus what? Absorption. Or what? Absorption minus actual. Either way, it can be used. Then I have explained to you the way of finding what? Under or over absorption. Whenever absorption is more, over absorption. Absorption is less, under absorption. Then we started with a very, very important technique, marginal costing and absorption costing. Marginal costing, absorption costing. Marginal costing, another name is what? Variable costing. Marginal costing, another name is what? Variable costing. You know, when it comes to marginal costing, it is applied for what? Short-term decision making. It is applied for what? Short-term decision making. If anybody who talk about marginal costing, the important thing is to remember that what? Contribution. What is the important thing? Contribution. How to calculate contribution? Sales minus all variable costs. It is one part of a profit, but before adjusting what? Fixed overhead. You know, before it's adjusted with the what? Fixed overhead. That is what is known as contribution. Because under marginal costing system, it is assumed fixed production overheads are considered as a what? Period cost, which is not relevant for decision making. It is not related with the production. That is the argument of what? Marginal costing system. You remember, we talked about the OAR, actual OAR and the what? Estimated OAR. So then the decision what you have already taken based on the OAR, sometime what? At the end of the period, you'll have to what? Reverse your decisions. You'll have to what? Reverse your decision. You remember that? We calculated OAR as what? 5. We said the product is giving you what? Loss. Therefore, we will reject the product. Later, we found the actual OAR. Then the product is giving you what? Profit. That's the reason marginal costing system is what? Arguing. Fixed overhead is what? Period cost, which is not relevant for decision making. At the same time, if you look at the absorption costing system, it is assumed, it says all fixed overhead that you are going to incur with regard to what? Your product. Therefore, you can't consider as a period cost, which needs to be taken to the account as a what? Product cost. Then the problem will arise, how to identify. Since we have not received the what? Bill. Also, it is identified for what? In total. It is identified for what? Total. In such a situation, we do calculate the OAR and we will absorb it to the what? Product through the what? Absorption costing system. Later on that, we will try to adjust what? Under or over absorption. Then we started with the what? Activity based costing. You know what is exactly meant by activity based costing. There are 6 steps that to be attuned when it comes to what? Activity based costing. Identify the activities, right? Support activities, right? Then again what? Identify the associated cost for the support activities. Third one, cost driver as to the reason why the cost is what? Incurred. Next one is what? Number of cost driver. Next one is what? CDR, cost driver rate. Finally, charge the overhead to product based on what? CDR, product or services. You remember, we went on in detail, but I'm pretty much sure, I'm pretty much sure there should be one question from the activity based costing. Most probably, my expectation would be what? It will be tested sections what? B. Section B as a what? 10 marks question. In case if there is no questions, what? Section B, you can expect from what? Section C. Section C. But very difficult to do the prediction for section C. Because there will be only 2 questions. No? Only 2 questions. 20 marks, 2 questions. Out of that 2 questions, you know, there are number of topics. 17 number of topics. All 17s are what? Important topic. Look at the past paper, different point of time. 20 marks question being tested what? Different areas. Therefore, in advance, very difficult for me to judge whether it's tested by section C or section B. But section A, you can get more questions where theory based, maybe you know why, what is meant by over absorption rate. There'll be 4 answers, right? How to calculate under over absorption. Sometimes there'll be a question from the what Hilo method, one question. Then there are a number of questions from what information system. There's a chance of getting the questions where in the information system, right? That will be what your paper structure. So what I'm telling you all, try, because there are a number of questions under activity based costing where in the past papers and your ACCA have. Please try to do at home all the other questions, because as much as you are practicing question, you will be enhancing what your knowledge. But I picked 2 complicated questions for the discussions. The rest you'll have to do yourself, right? Then we started with the what? Target costing. Target costing. So in the traditional, way of deciding the selling price, what we will do is we will try to identify what entire cost of the product. Then we will add profit. We will decide the selling price. But in competitive environment, changes are taking place rapidly. We'll have to go with the market. Whether we like it or not, we'll have to go with the market. Therefore, target costing system is teaching us, try to first identify the what market selling price, decide your profit margin, and decide the what is the target cost. If you want to sell the product for that particular price, what should be placed as what your cost. Then your actual costs, obviously what? More than that. More than that. Now we have to find out the way of what? Bridging what? That target cost gap. That is what we discuss under target costing. But make sure don't try to copy where in my PowerPoint the way of bridging the what? Gap. From the case itself, not only for that particular area, but also for it's applicable for all the topics. You'll have to decide based on the what? Cases. Read the cases, get the summary of the case, see the pulse of the case. Based on that, you decide it. Each cases are different. It has what own significance. You'll have to adapt based on the cases. Got my point? That is what we discuss under target costing. Target costing, there are 4 steps. Identify the market selling price. Decide the what? Expected profit margin. Third one is what? Find out the target cost. Then calculate or ascertain the what? Target cost gap. Finally what? Deploy the what? Techniques to bridge the what? Gap. These are the summary of what? Target costing. These steps will teach you what is exactly meant by target costing. There are a number of techniques that we can be applied to bridge the what? Gap. Then you remember we talked about small areas, idle time, normal wastage, right? See, at the very first class, I was talking about the Hilo method. You remember that Hilo method? Under Hilo method, we calculated how to calculate variable cost and the fixed cost. Again, you remember when it comes to the target costing, the examiner was use the what Hilo method, the way of calculating production overhead, variable cost and the fixed cost. Last part of the question, target costing. Today even we'll be talking about what life cycle costing. For the life cycle costing also, there will be a bit of a calculation with regard to the what Hilo method. So those are what we call it as what basic. I think we can get started with the what new chapter, life cycle costing. Anyone can explain me what is exactly meant by life cycle costing? Any idea? Very good. One answer that I got. What is life cycle costing? C says the point at we purchase the raw material. Point at we purchase the purchase the raw material until then from the finished goods. Don't take down. Don't take down. This is the answer that I have got from one of the students. This is the way what we have done in the management accounting as of now. How do we calculate the cost per unit? Very simple. We will try to accumulate all the what? Accumulate all the what? Cost. Agree with me? We call it as what? Total cost. Direct cost, prime cost, plus what? Production overhead, plus what? Production overhead. Then you will add one non-production overhead. Let's say your total cost is, accumulation of total cost is 100,000 units, sorry, $100,000, 1 lakh. Let's say you produce 1,000 units. Then how to calculate the cost per unit? 100,000 divided by what? 1,000 unit, which would give you what? $10 per unit. That is what we have learned in management accounting through the what? We call it as what? Traditional costing approach. If somebody asks you to calculate the what cost per unit or the profit of the product, what you would do? You will accumulate the what? Total profit divided by number of units. It's very simple. Then the profit per unit. But life cycle costing teaches us, no. You can't take only the cost that you have incurred with regard to the what product from what the purchase to what and purchase to what and there are some expenses. The product or the company is going to incur before manufacturing. That's we call it as what? Pre-manufacturing cost. Pre-manufacturing cost. Best example, research and development. Until yesterday's class, you tell me the truth. Did we take to the account that research and development cost to calculate the cost per unit or profit per unit? No. The traditional method says what? Accumulate and assimilate what? All the cost divided by what? Number of units, cost per unit. If you want to calculate the profit, number of unit, you will be calculating what? Profit per unit. Got my point? Am I clear to you all? But life cycle costing says what? No. You will have to track and trace all the costs from the introduction, from the research and development, until what? Entire part of the life of the product, which is what? Post-manufacturing cost. What is meant by post-manufacturing cost? Have you come across before these terminology? Pre-manufacturing cost, I said what? Research and development. Research and development is what? Pre-manufacturing cost. The best example, because you'll have to design the product. Simple example. You tell me. I'm coming across with a very lamest example. You're going to manufacture a product by using a machine. Whenever you calculate the cost per unit, do you subtract or do you adjust that machine cost? You are buying the machine for 100,000. Say an example, 100,000. Now by using that machine, you are producing a product. Then you say, when I'm producing the product, cost of the raw material, cost of the labor, you will accumulate all the costs. Then finally you say what? Cost per unit. Do you adjust the amount what you paid for that machines? No. You don't do it. But life cycle costing says what? Why did you buy that machine? To produce the product. Therefore, that cost also should have been what? Included. That is not a traditional method. Make sure that is not a traditional method. This method, which was invented by Beckinson, I can't remember his name properly. Beckinson in 1978, I believe. I'll check and let you confirm the dates and the person's name. They, the people, what they said was, you are going to buy this machine with regard to your product, right? Therefore, whenever you calculate the cost of the product, that cost also should have been taken to the account. That is what is known as pre-manufacturing cost, designing cost, research and development cost, acquisitions of what? Non-current assets, right? These are what we call it as what? Pre-manufacturing cost. And you tell me, what is meant by post-manufacturing cost? No, that is the cost that you are going to incur with regard to what your sales, no? Selling and distribution, that is what carriage outwards, transportation, right? Those are what? Carriage costs, outwards. I'm talking about post-manufacturing cost. No, that is also what the expenses comes under selling and distribution. Post-manufacturing. Sorry? Testing which would take place, what prototype, ne? Before the testing generally comes, before you manufacture the product. Am I correct? We call it as what prototype. You will check the sample first and you will do the testing. That is you are correct, but that is not post-manufacturing, pre-manufacturing. That is where the testing generally is done for one product, no? Am I correct? Testing is not for the whole item. You can't do the testing for the whole item. Then in case if the product is what fail, then the company is going to incur the lump sum of what? Sunk cost. Am I correct? We'll be talking about what is exactly meant by sunk cost in some time. No worries, it comes under short-term decision making. One of the complicated area, right? I will explain step by step. You don't have to worry about that part. Come back to the point. Can you tell me post-manufacturing? Very close. Almost you got the point. Storage, which would happen right after you're producing the production. Post-manufacturing cost means decommission cost. You remember, yeah, decommissioning cost, right? If you want to cease the product, if you want to take it out from the market, you'll have to incur the cost. I can tell you the best example for the Samsung company. Do you remember that it was 2000, not only for Samsung, even for the Toyota, once it happened, they deliver the one batch to USA. The product is ultimately failure. Now they'll have to recall all the product what is were in the market. Even it happened to, I remember Samsung also once. That is what is known as post-manufacturing cost. Because when you are decommissioning your product, you will incur the cost. That also should have been taken to the account when it comes to the life cycle costing. Therefore, very, very clear. When it comes to the life cycle costing, apart from the cost what we have learned as of now, another two more elements to be included. One is a pre-manufacturing cost. Another one is post-manufacturing cost. You can't calculate the cost per unit just putting the total cost divided by number of units. That is what we have learned under traditional costing system. Yes, I got the answers. Decommissioning cost. Very good. You are correct. Decommissioning cost is a post-manufacturing cost. Decommissioning cost. A best example, you want to cease the product, right? During the ceasations, you will incur the cost, right? So that cost we call it as decommission cost. Or there are some product which is failure in the market, then you'll have to recall all your product. That is another example with regard to the post-manufacturing cost. So that is a summary about life cycle costing. So what are the 5 phases, right, that you would see where in the life cycle? What are the phases that you would see where in the life cycle? Life cycle phases. Don't you all remember? A product or even business. A product or even a business should go through 5 phases. First one is research and development. Second one is introduction. You will introduce to market. Third one is growth. Next one is maturity. Am I correct? Next one is maturity. Last one is decline. These are the 5 steps, 5 phases that you would see where in your product life cycle. First, before you do a production, you will do a research and development. Am I correct? Excuse me. Yeah, quickly settle. But we will be learning there's a small contradiction between what life cycle costing and other costing. Listen very carefully. If you look at the traditional costing system, what we have learned, what we are going to learn, right? There are some costs which won't be taken to the account. The best example is what? Research and development. If you look at research and development, excuse me. If you look at the research and development, as far as long-term decision and the short-run decision, which is the what? Sunk cost. We'll be learning in some time. Which is a what? Sunk cost. Because long-term decision, you'll be learning under APM or AFM. APM or AFM. Investment appraisal. Under investment appraisal, what you would say, the cost that you have incurred with regard to the what? Research and development is a what? Sunk cost. Why? That place, they are arguing under any circumstances that cost cannot be recovered. Do you agree with me? You are doing a research. After doing the research, you spend for the research. Maybe you will be hiring a what? Research and development what? Companies. Right? You will outsource. Then you paid them 1 million rupees. Then you got the report. What is the research report says? Don't start this business. This business is giving you what? Loss. You tell me, will you go and dump your money for that particular business? You tell me the truth. After getting the research report, if that business is giving you what? Loss, will you go and dump your money for that business? No. Then can you go and ask from this research company, give me that money what I paid because I'm not going to start the business. Will they pay you back? No. Therefore, management accounting traditional approach says what? Long term as well as short term. Long term as well as what? Short term, it says what? That cost is what? Sunk cost, which is not relevant, which should not be taken to the account. But under life cycle costing, no. You paid with regard to that product, therefore it should have been what? Taken to the account. That is what we know, what we call it as what? Pre-manufacturing costs. Therefore, first that we will incur the cost via in the research and development. Then you will introduce to the market, right? Then the product will grow, right? Finally, maturity. Before decline, there will be a what? Pace of what? Maturity. Maturity means you will be stable where in the market for some time. That is what is known as maturity. It is applicable not only for the product, but also for the any businesses, even for your personal life, even for your education's life. Do you all agree with me? Do you keep on studying until you die? Do you keep on studying until you die? But the period may get differ person to person. Agree with me? Some people, the maturity period would be what? Long time. Same thing for the what? Any product we are in the market. I can tell you number of examples for what? This basis. Number of examples. But most of the companies are now in what? Maturity stage. In the maturity stage only, the company is, dumping money for what? Innovations. By doing some innovations and creation and innovation, they can extend the period where in the maturity. When they come to what? Decline, it's all over. So the declines, you remember, decline pays only the people are giving a bulk discount, volume based discount. They are giving the discount for the volumes. So when it comes to the what? Decline pace. Clear? People who have joined through online, are you all with me? Are you all with me? And what is life cycle costing? We need to track and trace cost and revenue which we have incurred or which we have got during this what? 5 phases. During what? These 5 phases. That is the summary of what? Life cycle costing. throughout what this whole life cycle, what are the costs that we have incurred and what are the revenue that we have generated. Clear? Because if you track and trace the cost and revenue for each phases, listen very carefully. We'll be getting 1 4 marks question where under life cycle costing, theory based question. We'll be doing that questions as well. When you are tracing and tracking or tracking and tracing the cost for each phases, it's easy for us for our decision making. We will have a better control and grip where in our cost. Better control cost under what our production system. Because you know why? If you look at the growth space, you'll have to do more marketing. Do you agree with me? Because now the product is or the company is what? Growing. Then you'll have to do a what? More marketing. If you want to do more marketing, you need what? Finance. Then you will speak to the what? Finance provider. And you will, you will get the agreement with the what? Interest rate. Because you need money. You need what? Money. So that can be done. All that can be arranged in advance by doing what? This life cycle costing. By doing what? This life cycle costing. So once again, summary of the life cycle costing. We need to trace and track cost and revenue which is associated throughout the 5 phases of what? Life cycle. That is the summary of what? Life cycle costing. Very simple idea. Including the what? Pre-manufacturing and post-manufacturing cost. Including the pre-manufacturing and post-manufacturing cost. And I have explained what is meant by pre-manufacturing, research and development, designing cost, right? Prototype, acquisitions of non-current assets. These are what? Research and development costs. Research and development or pre-manufacturing costs. Pre-manufacturing costs. Recent report says product or the company is incurring 90% of the cost through the what? Designing stage. Even for Apple, company Apple is incurring almost 90% of the cost during the what? Designing stage. That's the reason they try to recoup all the costs by keeping the what? Skimming pricing strategy when they are introduced into the market. We'll be learning what is exactly meant by skimming pricing strategy. When you are introduced in the market, you will come up with a what? High price. Quickly, you will recoup the cost what you have incurred in the designing phase. Because the designing phase, the company is incurring the lump sum of money. That is what I said. Almost the research report says 90% of the cost with regard to the product, the company is incurring the what? Designing stage. Got my point? Am I clear to you? Small heading, put a star mark and write. Design out cost means design out cost means finding the ways to reduce the cost, finding the ways to reduce the cost, finding the ways to reduce the cost throughout the entire life of a product. Throughout the entire life of a product. Right? Example, using durable material. Using energy efficient system. Energy efficient system. Energy efficient system. Energy efficient system. Using durable material. Durable material. Using energy efficient system. Energy efficient system. Energy efficient system. uh, Take down the short form, the meaning of life cycle costing. Life cycle costing, it's easy for you to understand. Life cycle costing means tracking and tracing, tracking and tracing, tracking and tracing, cost and revenues, cost and revenues, right? Throughout the each phases of life cycle. Throughout the each phases of life cycle. Phases, not phases, PH. There are 5 phases. Phases of what? Life cycle. You know what are the 5 phases? Research and development. Second one is what? Introduction. Third one is growth. Fourth one is what? Maturity. Fifth one is decline. Decline. It's on the book. Research and development. Everything is given where in my PowerPoint. You don't worry about that part. Shall we get started with the questions? Excuse me, another small advice that need to be shared with you all with regard to the life cycle costing. Whenever examiner asks you to calculate the figures under life cycle costing, first calculate the traditional approach. First calculate the traditional approach. And the second part of the question, you will have to show them a what? Life cycle costing, profit or losses. First phase or first part, try to show as a what? Traditional approach of what, or traditional method of what? Profit or losses, cost and revenues, and then focus on the what? Life cycle costing. Then only the full marks will be provided, because some of the marking scheme I went through under ACCA, they have shown only the what? Traditional method. Later, additional point they have elaborated with regard to the what? Life cycle costing. Because you may also argue in the same management accounting, performance management, the other people one side saying what? Research and development is what? Sunk cost. Same person ourselves we say what? No, research and development is what? One of the life cycle costing. It's one of the cost. Am I correct? But the traditional approach, we don't take into the account, right? Only for the life cycle costing, it should have been taken to the account. That's the reason, even in the life cycle costing, first show the traditional method of what? Profit, and then what? For the 20 marks question. For 20 marks question, if it is a 10 marks or OTQ question, if since it is tested only in the life cycle costing, we can show them a what? Life cycle cost or the life cycle profit based on the what? Requirement. Understand what I said? But if it is a 10 or 20 marks question, better come up with a what? Both. Both. Then only the examiner will get to know that you know everything. Because whenever you give an answer, there should be evidence. There should be evidence. We'll have to bring the, idea not to reduce the marks for what our answers. And we'll have to prove them that we know everything. Then we can easily collect the marks via in the exam. Got my point? Am I clear to you all? Let's get started with the first 10 marks question, and then we will move on to the 20 marks question. Both are past papers questions. What we have learned as of now is the traditional. How to calculate profit? Sales minus expenses. But here we say we can't say sales only minus expenses. Consider what we have already spent. You got late, then I have already spent 15. But manufacture a product, you are like the machine. Calculating the profit, what you did, sales minus what? Expense. Here, life cycle costing sales, not only sales minus expense. What you have already bought the machine, that is also covered you. The portion should have been what shared over that particular life cycle. If the machine is for the 10 years, if you are calculating what for 1 year, then out of that 10 years, the portion should have been given to what is what? Even for what? After post manufacturing, in a decommissioning cost. We take traditional method, but we don't take those parts. Only what we will take it, but is relevant for produce and sale. But it is applicable only for the life cycle. We go with the traditional. Can you all try this part? 10 marks questions. 10 marks questions. Excuse me. Don't do question number 3 only. Don't do, since we have not done yet. Don't do question number 3 only. You can try all the other part of the requirement. Yeah. Online student, have you all got the questions? Excuse me, don't get me wrong with regard to the order of what your syllabus. I'm not following the same order what has been shared or what is there in your ACCA hub. I can't go with the same order. Because you know why? Some people are coming from the what? Basic management accounting background, right? Say for an example, simple example. Excuse me, tomorrow we are supposed to start throughput accounting. We are supposed to start throughput accounting. To do throughput accounting, you'll have to be familiar with the what? Basic limiting factor. That comes under the 7th in our syllabus contents. But throughput accounting is what? 3rd. You got my point. Therefore, first I'll have to teach you the what? Single limiting factor. Then only I can come back to the what? Throughput accounting. Therefore, I have changed the order. Don't get me to go with the what same order where it is in your hub. I can't go. Then it will be a biggest issue that I'm going to face. You just better watch the recording. Excuse me. Watch the recording. Please attempt the questions. Please attempt the questions. Do your level best. I'm not expecting you to give me the final answer. That I will do myself. Yeah, then only get calculated profit or cost per unit. Requirement is profit. Have you got the answers? Anybody who have got the answers online? You have to complete in 12 minutes time. See, that is giving you how much? 87,330. Try for part 2, 3, 4 and 5 without, I told you not to do, what is the number? Question number 3. Not to do. Ah, yeah. Excuse me. I'm just asking the small question with regard to the what designing phases. As I have clearly explained to you all, when it comes to the life cycle costing, it's very clear. More cost the company or the product is incurring during the what early stage, during the designing stage, during the what designing stage. My question: what is the costing technique that you would suggest? What is the costing technique that you would suggest for the early stage? Think and tell me. Think and tell me. Listen very carefully. Excuse me. Excuse me. Let me know the answer for this question. I have clearly explained to you all. Most of the products or the companies incurring more cost during the designing stage of the product. Early stage of the product. Since a company is incurring more cost during the designing stage, more than 90% of the cost based on the reports, what is the costing technique that you would suggest for designing stage? Only for the designing stage. Standard cost which is applicable for the entire. What did you say then? Can't hear you. Can you come again? What? Target costing. Not the target costing. Objective test question. Fill in the blank. not the four answers are given. Activity based costing. Since the company is going to incur only the what overheads, not the direct cost, no? During the designing stage. What is meant by direct cost? The cost that is vary based on the what? Activity level. That will get started when you are starting your production. Designing stage means what? Pre-manufacturing cost. Am I correct? Therefore, what is the costing technique that is what most suited for the designing stage? I would say what? Activity based costing. Activity based costing. Have you got the answers online? Excuse me, ladies and gentlemen. For the time being, for the moment, don't check the answers from where the particular website. It won't give you any benefits for the moment. You can do that part, not now, before you get prepared for the what? Exam. Not now. Ultimately, you will be cheated yourself. You think that you can get to know everything by referring the answers. You won't be learning end of the day. You won't be learning end of the day. Therefore, what I'm telling you all, first try to do it yourself. Do yourself, right? Later we can check the answers. Online, have you all got the answers? Time up. Can you all share me the answers? The people who have got the answers through online. Here, some of them who have got the answers. Girls, have you all got the answers? What is the answer? See, that is how much. Yeah, let's double check the answers. Right, okay. Let's double check the answers. Wall company generates and sells electricity. They are selling what? Electricity. Electricity is what? Their output. Correct? It operates two types of power stations. One is nuclear and another one is what? Wind. The cost and output of the two types of the power stations are detailed below. Nuclear stations. A nuclear station can generate 9,000 gigawatts. This is nuclear station. They are making 9,000 gigawatts of electricity end of what? Its 40 years useful life. So these 9,000 gigawatts of electricity, each of what? Excuse me. Can you all brief me that particular sentence, please? 9,000 gigawatts of electricity in each of its 40 years. Are they making 9,000 for all 40 years or every year? Every year. Therefore, in order to calculate for the total duration, which is what? Times 40 years, that would give you how much? 3,060,000. Am I correct? One more zero. Is that understandable? This is our total output. Total output for the 40 years time. Operating cost of 486 million. Operating cost. Yeah, I'm sorry. Right. Operating cost, which is how much? 486 million per year. Per year, 486 million. Operating cost include the provision for depreciation, 175 million. What is meant by depreciation? Can you all tell me? Depreciation, how do we calculate the depreciation? How do we calculate the depreciation? Depreciation equal cost, scrap value, or another name is residual value, another name is realizable value or residual value, divided by what? Economic lifetime useful periods. Let me know the summary form of what is exactly meant by depreciation. Summary form of depreciation. What we are doing through this what formula? We are, if you look at this particular project, what we are going to do, we are going to give the specific portion from the non-current asset for what? throughout the lifetime period. Do you all agree with me? That is what is known as a depreciation. So this operating cost, right? Inclusion of what? Provision of what? Depreciation. Am I correct? Therefore, we need to calculate without depreciation, which would give you 486 minus what is the depreciation? 175. That would give you how much? 31? 311. That is for the per annum. That is for what? Per annum. Since you are doing the calculation for how many years?
40.
Times 40, then the total operating cost is how much? 1244. 1244 000. That's all. That is in terms of million, no? Yes, in terms of what? Million. Operating costs include the provision for depreciation 175 million per year to recover 7,000 million of what? Cost of what? Building for the power station. Since you have subtracted the what? Depreciation, now you will have to include the what? Cost of the what? Building. Building, no? Yeah, cost of the building of the power stations. Now, building cost, which is 7,000 million. Am I correct? 7,000 million. What else? Each nuclear station has an estimated decommissioning cost of 12,000 million at the life. This is what we call, post-manufacturing cost, decommissioning cost. 12,000 million is about post-manufacturing cost. Best example about the what? Post-manufacturing. Look at what the question itself, it clearly says. Each nuclear station has an estimated decommissioning cost of 12,000 million at the end of its life. We'll have to what? Take it out. The decommissioning cost that is 12,000. Now, what is the total cost of the product? Total cost for all 40 years and everything. Come on. 31,440 million throughout the what? 40 years time. Throughout the what? 40 years time. Now the requirement is what? First requirement. What is the life cycle cost per gigawatt of the nuclear station? The question is talking about what? Nuclear station. The nuclear station, this 31,440 million that you are going to incur to make how many gigawatts? We found 360,000 gigawatts. Therefore, what is the cost per gigawatt? Cost per gigawatt 31,440 million divided by 360,000. Correct? Now, what is the cost? 83 point. 87.33. So the requirement is what? In terms of million to the nearest 3,000. Sorry, nearest 1,000. To the nearest 1,000. Nearest 1,000 would be how much? 87,000. Is that understandable? Is that understandable? Online student? Is that understandable? Any problem, please put them forward. I can clarify you all doubts. Are you clear? Down. Is it visible now? Excuse me. Since we have subtracted depreciations, I have put the total amount of the what? Building. For all 40 years, total amount of the building is what? 7,000. If you want to double check that depreciation is correct or wrong, if you want to double check whether depreciation is correct or wrong, just check and see 7,000 million divided by 40 years. How much? 7,000 million divided by 40 years. How much? Correct now. That's why I have subtracted, and finally what? I have added the total 7 million. Or what you can do is, excuse me, or what you can do is 486 multiplied by what? 486 multiplied by what? 40, but don't add 7,000. Don't add what? 7,000, since that is already included with the what? Depreciation. That's also another options of getting the answer. Ultimate answer would be what? Same. The depreciation is applicable for particular year, no? Umar, what do you want me to do? Umar, look at the question, what it says. A nuclear station can generate 9,000 gigawatts of electricity in each of what 40 years. So per annum you are making 9,000 gigawatts for 40 years, because what is meant by life cycle costing, we need to track and trace all the cost and revenue that being what included or what incurred with regard to the what 5 phases of what life cycle. 5 phases of what life cycle. So for in a year you are making 9,000 gigawatts, then 40 years time you will be making what 360,000 gigawatts. Then the operating cost of what this particular nuclear station is what 486 million. That is what included with the depreciations. So if you are going to take that part with the depreciation, what you can do is 486 times what 40 years, but don't take the value of what building. Don't take the value of the building, because the building value is what 7,000 million. 7,000 million 40 years, the depreciation is what 175 million. So you have two options. One option, straight away you can take the what 486 minus what 175 times 40 years. That is the total operating cost for all 40 years. And then again you will have to add what 7,000 million as a what building cost. Or if you are multiplying 486 times 40, don't add what that 7,000 million. Then the decommissioning cost is 12,000. Altogether 31,440 million for throughout the what life cycle. In order to calculate the cost per gigawatts, the total number of gigawatts that you are making 360,000. Therefore 31,440 divided by 31,440, that would give you 87.333. In terms of what thousand, 87,333, but they have given nearest answer. Therefore, nearest answer would be 87,000. Umar, are you with me? How am I getting through it? Welcome. Shall we move on to the next part of the questions? Are you clear? Sure. You tell me the answer for this question with the evidence. I need the reason also. I need the reasons also. Which of the following will decrease the total life cycle cost of the nuclear station? How to reduce the cost? How to reduce the what? Nuclear station cost. As long as if you are able to reduce the what your cost, each element, you can reduce the cost. Do you agree with me? If you are reducing the what your what building cost, you can reduce it. If you are reducing the what operating cost, you can reduce it. If you are reducing the what decommission cost, you can reduce it. That's very straightforward. If you want to reduce the what cost per unit, you have to reduce the what total cost. Increase the useful life of the stations. Increase the useful life of the stations. Is it correct or wrong? Think. Why? I need evidence. Why do we say I can prove it? That's correct answers. How? Instead of putting the 40 years, if I put 50 years, what will happen cost per unit? It will reduce. Then how can you say what no? A perfect answer. Perfect answer. When you are increasing, expanding what life cycle, automatically what all the other cost also what will increase. The best example is what? Operating cost. Operating cost what? Will increase. Then what will happen? The depreciation. Once again the same amount. Am I correct? Therefore, that's not a correct answer. Second one is reducing the what? Decommissioning cost. Yes, that's correct. When you are reducing your decommissioning cost, you can reduce the what? Cost per unit. You can reduce the what? Cost per unit. The answer would be only B. Only B. Only B. Correct? Don't do question number 3 for the time being. We will do it that part later because that part to be covered via in your syllabus. Environmental costing. Environmental costing. Small theory areas. It will take about 30 minutes time. We'll do it in some time. Right? That environmental costing. Right. Next part is a very good question. Just have a look. Anyone who have got the answer for the next one? Question number 4. Question number 4. Anybody who have got the answer? That is how much? 408. What about others? Once again, you will have to remember the basics. You should know what is meant by margin, what is meant by markup. As long as you know the margin and markup, you can get the answers. The whole question, which is that particular question, I'm sorry, that particular question is talking about what? Markup and margin. Right? Just have a look. If wall company set a price to earn a profit margin 40%. Margin. 40%. If the question says margin is 40%, selling price is how much? Margin means what is 100? Selling price is 100. Then the cost would be how much? 60. But the question clearly says it's from the what? Operating. Then it should, this cost should also be what? Operating cost. Agree with me? Operating cost. This is a summary of the questions. Right? Summary of the question. What will be the total lifetime profit per stations? Profit per stations. Now let's go back to the wind stations. Wind stations. What it says. Wind station can generate 1700 gigawatts of electricity per year. 1750 gigawatts. It has a life cycle cost is how much? Life cycle cost is 55,000 per gigawatt. Excuse me, ladies and gentlemen. Let me know what is meant by life cycle cost of 55,000. I'm not clear with that. Can you all help me? What is meant by that 55,000? which means what? That part which is included with the what? Pre-manufacturing and the post-manufacturing. Pre-manufacturing and post-manufacturing. And the average operating cost, which is how much? 40,000 per gigawatt. Then what is that 15,000? That is what? Pre-manufacturing as well as what? Post-manufacturing costs. Pre and what? Post-manufacturing cost. Now, you know margin what? How many percentage? 40%. Therefore, 60% is cost. Agree with me? Operating cost, which we found or which is given as how much? $40,000 times what is 100. That would give you the what? Selling price. How much the selling price? 66,000. Come on. 666.66. That is the selling price. Is that understandable? First. Is that understandable? Now you know the selling price. You know the what? Operating cost. And you know the what? Life cycle cost. You tell me how to calculate profit under life cycle costing. Can I deduct 40,000 or can I deduct 55,000? 55,000 based on the what? Life cycle costing system, right? Therefore, life cycle costing profit, life cycle costing profit equals 66,666.66 minus what? 55,000. That would give you 11,666.66 per gigawatts. Do you all agree with me? Do you all agree with me? Now they have given in the question a station which generate how many gigawatts? 1,750 gigawatts. Therefore, 1,750 gigawatts. Each gigawatts, your profit is how much? 11,666.66. How many years the total duration? 20 years. Then how much? 400 million. So in terms of what? Million, 408. Is that understandable? Is that understandable? Don't get confused. $55,000. The 11,666 is what? Dollars, not in the million. That is in what? Dollars. Every 1 gigawatts, the company is making the profit of what? $11,666. So here, how many gigawatts that they are making? Every year, 1,750. Therefore, 1,750 times what? 11,666. For how many years? 20 years the total. Therefore, that would give you the total profit of what? What do you call wind station? 408.33 million for throughout the what? Life cycle, which is what? 20 years time. Are you okay? Yeah, correct. 20 years. Just double check. I'm correct. Mahesh, you have got the correct answers. Very good. Just double check. You all are backing, no? Excuse me. This 408.33 is what? Millions. This is millions. So all the figures are what in terms of dollars? 11,666.66 what? Dollars. That is not in millions. right? How many of them who have got the correct answer? Please raise your hand for these questions. 1, 2, 3. What about others? Girls, where you all went wrong? Girls? Excuse me. Where you all went wrong? Where you had a problem? Where did you all make mistakes? Yes. Alright, that's not a problem, but you can collect the mark for your working. What about back rows of the class? Where you went wrong? Once again, summary is what? To tackle any questions in performance management, you should have a 360 view. If you know only the life cycle costing, you can't get the answer for this question. You should know what is meant by net profit margin. What is meant by markup. Am I correct? You should know what is meant by operating cost. Very simple. Whenever you tackle any questions where in the management accounting number base, you should have a 360 view. There's no minimum, no maximum. Almost 17. Now only we started. Lot to be done. Linear programming, multi-product break-even analysis, transfer pricing, performance measurement, standard costing, advanced variances, operational variances, planning variances. Don't know why, because the syllabus is very vast under PM. But if you look at CIMA, this PM is the two module, P1 and P2. But here, P1 and P2 combined as a one module. That's the reason this ACCA is not highly recognized than the other professional bodies. February 8th. I'll give you my tentative schedule. Next week you won't be having any classes. Full week holiday due to the Pongal. Right? That's a management decision. Right? Whole week. Week after I'll be starting the class Tuesday. Week after you are having class from Tuesday, Wednesday, Thursday, Friday. Then again from last week, the February, starting once again from Tuesday, continuously at a stretch, we will be having 12, 13 days class. Saturday, Sunday also you are having classes. Because you know why? Tomorrow evening I'm flying back to Colombo. I'm having class Saturday, Sunday we're in Colombo and Kandy. That is for the different program. Then I have to come back. So, but anyway, next week due to the Pongal, we are having holiday. But anyway, I'll be in Chennai. I'm coming back, going tomorrow and coming back on Saturday. That's the tentative schedule. Excuse me. With tomorrow's class, I think we are covering 3 chapters we are in our ACCA Hub out of 70. With tomorrow's class, 3 will be covered, but I took it only 5 days. Right, let's get started with the last part of the questions. Come on. Which is the following are benefit of life cycle costing for whole company? Am I correct? Requirement, benefit for whole company, right? First answer, it facilitates the designing out cost of the product development stage. Do you all agree with me? Yes, I have given, but finding the way of what? Reducing the cost. That is what is known as what? Designing out cost. Finding the ways of what? Reducing the cost. That is what is known as what? Designing out cost. That's correct. Answer is correct. Right? It can encourage the better control of operating costs over the life cycle. That's also correct. That's also correct. Third one, it gives a better understanding of the causes of what? Overhead cost. Causes, because it will give you the understanding of the overhead cost. It won't give you the picture for the what? Causes of what? Overhead cost. The answer is wrong. It gives you the understanding of what? Overhead cost, not the what? Causes of what? Overhead cost. Last answer, it provides the useful data for short-term decision. Are we using for the short term? No, entire life cycle. If you look at that nuclear, it's all about what? 40 years time. Am I correct? Therefore, what would be the correct answer? 1 and 2. 1 and 2. 1 and 2 means what? Yeah, B would be the correct answer. B would be the correct answer. Shall we do one more 20 marks past papers question? This is December 2008 marks. Can you all try quickly? No. That because that's a management decision with regard to my schedule also. I'm occupied with some other classes on that. That's why, because tickets and all that will be an issue. I'll have to come back to Sri Lanka here. It was planned last minute only. The classes was planned only the last minute. That's why everything got messed up with the schedule. Just imagine about my side. Right after finishing your class here, Sunday, full day. Please attempt the questions. First, read the questions. Try to underline that you think what is important. Please read the questions. That is December 2008 past paper question. 20 marks question. I removed one component from the original question because that we have not done yet. Budgeting part. Please attempt the questions. Please attempt the questions. Already you are studying. How do you have what skill level? Ah, yes, you are not doing the degree. When I type, sometimes it may take time. You should have a calculated profit for the data analytic. There are 3 years now. Okay. First, try to understand the questions. First, try to understand the questions. Once again, you should remember the basic references. You should remember the basic references with regard to the variable cost and but fixed cost. Variable cost and the fixed cost. Excuse me. If you have any doubts, first you let me know with regard to this question. I will clarify the doubts. Then anyway, I'm going to explain all the question. Each and every topic, at least we'll be discussing a 2 past papers questions. Right? That's not a problem. What I'm asking from you all, I hope that you all read the question. Any problem? Because a lot of people, excuse me, who are having a problem with where to start the questions. Where to start the questions. All these difficulties that we will face when it comes to performance management. It is there. It is there. I can understand because you know how to calculate profit. Excuse me. Excuse me. The way of calculating profit in management accounting, sales minus what? Total cost. What is meant by total cost? There are two elements, variable cost and the fixed cost. If you look at the variable cost, mainly what? There are two elements, variable production related cost and variable selling cost. Fixed cost, production fixed overhead and non-production fixed overhead. Then you can get the what? Profit. Sales minus total cost equals what? Profit. The requirement is what? Calculate the what? We'll do it at A also. Look at the B. Produce the budgeted results of the game's health and the briefly assess the game's expected performance. Performance means what? Profit. Each year profit with the what? Total. That is the requirement. How to calculate profit? It's very simple. Sales minus what? Expenses. Right. Let's have a break. Right after the break, we'll continue with these questions.